We are live here on TikTok. Do I have sound? Yeah, I have sound. Cool. So, welcome everyone to the first episode of Bacon Bits. That's what I'm calling this show. This is going to be a live show from now on. I'm planning to do it twice a week on Tuesdays and Fridays. Luckily, I got this feature on TikTok that now lets me share screen. So this is like really helpful. I can finally show all kinds of news articles, charts, data, etc. So hopefully you like this format. Let me know if anything is broken. But every Tuesday and Friday, around this time, we will be going live on TikTok, YouTube. I'm also doing Facebook and Twitch. So, and afterwards, this will be uploaded on my YouTube and also podcast platforms for listening. So yeah, throughout this show, we're going to be covering obviously Bitcoin, Ethereum price analysis, a bit of Bitcoin dominance as usual, and then the latest events that are the most kind of pressing. So today we have, first off, the CPI numbers, which just came out. You can see on the screen. We have the Ethereum Merge, which is happening in 2 days, super significant. And then we have a couple more major events that I'm personally watching. So for example, first off, there are a bunch of implications that the ETH Merge could bring. And then afterwards, very soon in September, we also have the Cardano Vasil hard fork. I think this is also very significant. A lot of people are not talking about this. And then a couple more. So Apecoin has a major update. Shibarium for Shiba Inu. Frax shares, FXS. And then also the AptosSui ecosystem could be launching soon. So we're going to cover all of these, and then we'll do a Q&A in the end. And that will be the schedule for today. So yeah, without further ado, let's get right into it. First off, let's cover the CPI numbers, which just came out. The actual numbers that came out are 8.3% year over year for inflation and 0.1% month over month, which is a little bit higher than the forecasted 8.1% year over year and negative 0.1% month over month, which was decreasing, but now in actuality, it's still increasing. I think the only thing that the inflation numbers can tell us, for me personally, at least, is if it's higher than expected, prices drop for the day and maybe a couple days at max. Usually on the day of, it has a dump and then it kind of quickly goes into other significant events take over again. And then if it's better than forecasted, right, lower than forecasted, obviously price will go up a bit, like we've seen in the last CPI report. But then it becomes a nothing burger again. So I'm not a macro expert. I follow a bunch of newsletters, etc., for this, but I haven't found any kind of use case to take advantage of these data after they come out. Because let's face it, like you and I, like 99.999% of people are not going to know the CPI numbers before they come out, right? It's literally the U.S. government knows. So I don't think it's that practical to speculate on potential CPI results unless you're really good at looking at other metrics and how it's calculated, etc. I'm not good at that. So if I'm on the consuming side of this data, whenever it comes out, it's not going to be an actionable trade for me. So I think that's the case for most people as well. And that's what I recommend to people. It's just don't follow this like as gospel, especially if you're waiting for it to come out and then act. Chances are you're late to the party, right? So, but nonetheless, it's definitely always worthy to study how CPI impacts, speculative markets, etc., and how it's actually calculated, how the economy is actually doing. That stuff, obviously, really useful if you have the time, if you're interested. Let me recommend you actually one newsletter that I follow that talks about this very in depth. It's a macro newsletter. It's the, one second. If I can find it here. Here. So soft shell, right? This is one of my employers. newsletter. We're a free research firm as part of my employer's business. But this is Macro Mondays by M6 Labs, which is, where I work at half the time. And we just published this kind of free macro newsletter every Monday, going over, everything that's happening, not only in the US, but also, in Czech Republic, in European countries, in Russia, and then, looking at their gas prices, looking at everything else. And I think this is, if you really have the stomach for this, right, getting ahead of the curve and studying, what's really happening around everywhere. And then if you can have at least some sort of educated guess on what the potential inflation numbers will be coming up, then you have an actual edge. But if you're just like me, you don't have a stomach to study this kind of stuff, and you're waiting for the CPI numbers to be told to the entire population, you're not going to, have an edge to trade it, right? So that's my view on it. But if you're interested, check out M6 Labs on Substack. It's a completely free newsletter. I'm starting to read these every Monday as well. So that's that. Moving on from CPI. The next, most significant thing that we need to talk about, obviously, is the ETH Merge. So the ETH Merge is happening supposedly on September 15th. So 1 day, 13 hours away. And what this is the second largest cryptocurrency, Ethereum, is transitioning from proof of work to proof of stake, which is it replaces mining with staking to secure the network. This is significant in multiple ways, right? So first off, proof of work, as many people already know, it consumes a lot of energy. Once you transition to proof of stake, you no longer need to use GPUs and et cetera, the hardware, to consume electricity to actually produce blocks. This is really good for the environment, right? For the narrative. But on top of that, there is the so-called triple halving event. What this means is once you transition to proof of stake, the existing block rewards, the new Ethereum being mined that were previously rewarded to proof of work, now goes to proof of stake stakers, right? And because inherently proof of stake is more efficient than proof of work, that reward, or even bribe, if you want to call it, that typically gets rewarded to miners, is reduced dramatically. It's actually a 90% reduction in the block rewards that's being, new Ethereum being issued to, incentivize people to mine before, now goes to stakers. That number is only 10% of what it used to be, right? So as you can imagine, right, doing the math, this means new supply issuance of Ethereum dramatically decreases, right, by 90% after the merge. So this is the number one most significant thing that you and I are concerned about. It's this directly impacts price, right? And then secondly, right, I want to bring your attention to this thing, which I've talked about before. It's the ultrasound money calculator or analytics tool, right? So what this tells us is on the supply side, right, you have the Ethereum issuance rate, right, which right now is 5.5 million ETH per year. After the merge, it's going to be around 0.6 million, right? And then on the demand side, right, Ethereum also has this feature called EIP 1559, which burns ETH based on each transaction, right? So when anyone submits a transaction onto the Ethereum network, some ETH is burnt based on how much gas is used, right? So this is currently, this feature, right, is currently burning 0.6 million ETH per year, right? Obviously, on the current proof of work mining numbers, right, there's still way more ETH, created, or I would say, yeah, it's created every year versus destroyed, right? So ETH is inflating. But after the merge, you see this number actually matches this, and you can see actually down the line, it's highly likely for it to be below the issuance rate, the burn rate. So what this means is after the merge, new issuance rate of Ethereum is going to be lower than the rate that is burnt, it's destroyed. So this makes ETH deflationary. It's a deflationary currency, deflationary asset. And that's super bullish, right? So that's the main kind of bullish case for Ethereum's merge in terms of price. And highly recommend you guys to check out ultrasound.money. This tool really simulates everything, and it gives you the breakdown of here it's the supply issuance. You can track kind of this curve slowing down, right? And then you can also track on a hourly, daily, monthly, or even yearly basis of what are the largest types of transactions that burn ETH on the Ethereum network. And you can match kind of one-to-one of what you've heard about of ETH being used the most, which is like Uniswap trading, OpenSea, Tether, etc. And then you can see all of those numbers, right, of how much ETH is burned, taken out of supply. So this is all real data, and I think this is really cool. Now, the elephant in the room is the Ethereum merge priced in, right? Is it, how do we act on it? Once the Ethereum merge happens, is it going to be the sell the news event, right? Are people buying the rumor and selling the news? Or is it going to be not that significant? So I do have a TikTok video or short video planned that's going to come out really soon, I think today. But the TLDR is, in the short term, I think the ETH merge is priced in, right? So all of your short-term traders that are speculating on this event, whether it'll be successful or not, and it's hype, they will have already bought in. And by this point, every single person in crypto has heard about the Ethereum merge, and chances are they know that it's this month. If not, they know that it's tomorrow, right? So I think short-term, right, if you're speculating, tomorrow, you're going to buy today, sell tomorrow, there is no trade there. You don't have any advantage there. And I think the most likely case is ETH price for it to see a short-term dump once the merge goes live tomorrow, right? So we can see the ETH chart here. It's already impacted by CPI a bit, so I don't know how much more this can drop, but highly likely, right? I think a short-term kind of sell the news event. It's what people typically expect, right? So some people will be selling, other people will be trying to short, right? On the day off, let's short the news, right? But I think really the smart thing to do is to not trade this event at all. Because while you can treat the ETH2 merge as just an event, a big like hype news, which it is in the short term, I think the real effects will really come in place in the long term, in the few months, and I think even a year after, right? So over the next year. What do I mean by that? Well, right now, right, all of this like rally on Ethereum, right, and even if tomorrow we see a sell the news event, it's going to be highly driven by speculators, right? People trading this event. But the real effects, right? For example, the 90% issuance cut, whether ETH will actually successfully become deflationary. And then the other thing is ETH staking reward 8 to 12%. Staking interest. So there is also a estimated staking reward rate increase, right? So currently the ETH staking rate, right? If you just go on Lido, you can check kind of the latest rates you can get for staking ETH. And you can see ETH staking rate is about 3.8%. If you run a validator, you can get up to 4% APR. But the ETH staking rate after merge, if you just Google this, and then here, you see that first off, Binance has already launched a high yield ETH staking program. And this is giving you 6%. So, how are they giving you 6% when the ETH2 rate is 4% right now? Well, this is because the ETH staking rate is estimated to increase to 8 to 12% after the merge. I think I can find, there was actually this research article by Amber Group, I think. Yeah, here. Highly recommend you guys to check this out. Just Google Amber Group ETH Merge staking rate. right? So this will give you kind of the everything breakdown of the changes in terms of the economics. And you can see if you scroll all the way down, you can staking reward, right? Validators could expect to earn a total of 8 to 12% APR due to all the factors mentioned above. So what other factors are in here? Well, aside from just the Ethereum, new Ethereum being issued, after the ETH merge, validators will also have MBV rewards, right? And fee rewards. So these are the gas fee that are kind of getting distributed. I'm not sure exactly what this is, but the MDV rewards is much clearer because then right now, currently, you have the miners, right? In proof of work, the miners take care of the transactions. So MDV is when the miners, they see all of the incoming transactions, right? For example, a Uniswap trade. If the trade is not that efficient, for example, someone is paying way more than they could potentially get for a trade on Uniswap, what the miner could do is they take that transaction that someone else wants to execute, they arbitrage it by, for example, buying some of that token on another exchange beforehand and then taking advantage of that gap, right? So this is the simple example of what an MBV kind of value extracted could be like. So right now, the MBV money is all earned by miners. But after the merge, right, because they're no longer miners, stakers, and validators replace them, the validators will actually get MVV rewards, right? So this amount, if validators choose to distribute this, right, they can increase the APRs that they can distribute to the stakers, to Ethereum stakers. And also there's fee rewards. I have to study what the fee rewards exactly are. But essentially, it comes down to miners are replaced by stakers. Thus, all of the existing revenue, aside from mining, that are extracted away by miners, will be given to stakers after. So this is why staking rewards will actually increase, right? Versus right now. So right now, because there are no, the ETH2 staking rewards right now are only kind of on the beacon chain. It doesn't actually take care of any transactions. That's why there are no extra value extracted by the stakers, the validators right now. But after staking completely replaces mining on the whole Ethereum network, all transactions go to stakers, there will be more value that are able to be extracted by the stakers. And that's why the staking rewards will increase. So the expected rate is to be increased is to be 8 to 12% APR. And this factor, along with the deflationary factor, right? These two combined make ETH a much more attractive asset than it is today, right? After the merge, it's going to be much more attractive than it is today. So I think this long-term effect is not priced in. Why do I say that? Well, you got to think about the different crowd that are interested in this 8 to 12% increase in interest rate and also the deflationary nature, right? These are the people that want to buy ETH and stake it, right? Buy ETH, hold it for a long time. So these are the bigger money, right? Generically speaking, versus the short-term traders who are just speculating on the news. So I think the big money haven't all bought into these two factors yet. Why is that? Well, ETH Merge haven't gone down yet, right? There's a non-zero probability for it to fail tomorrow or on the 15th. And even if it doesn't fail tomorrow, over the next few months, there could be other forks, right? The network could run down, could go down. It could have a 51% attack. All kinds of shit could happen, right? And, ETH proof of work, maybe it becomes the main chain. Who knows, right? On the super extreme rare case. Maybe Ethereum Classic becomes the main chain. Nobody knows yet. So all of those factors combined, right? If you are someone like Morgan Stanley, right? You can't deploy the money right now thinking that, okay, rewards are going to increase, it's going to become deflationary. Let's just buy right now. That's not what would they think, right? what they are way more likely to do is wait not only till after tomorrow, but even months after, right? Slowly, right? Their risk analysts will look at the network, see how smoothly it's running, and then say, okay, like 1 month after, let's deploy maybe 10% of our assets, 10% of our stash in. 2 months after, let's deploy another 10%, right? And then 6 months after, let's go all in, right? Or all the amounts that of ETH that we wanted to buy, let's buy, 6 months in once it's stable. So that is going to be the real long-term buyers, and that crowd, I don't think it's priced in. And that crowd, I think, is also 100 times larger than the short-term traders kind of stash, right? So TLDR is, yes, you can try to kind of trade this event and say, okay, tomorrow it's going to be sell the news, let's sell. But I'm not doing that. I don't think there's any, edge that you can get there. Everyone knows about this. Everyone knows about buy the rumor, sell the news. Everyone knows the ETH merge is tomorrow. So you might win, but you also might lose, right? But not everyone knows about the 8 to 12% APR increase, which is only going to happen after. Not everyone knows about the deflationary nature. And I think also many people are underestimating the risk that the merge could fail, and the fact that large money are not going to be, trading this. So that's how I'm playing this. Continuing to DCA. If we see a dump tomorrow, great, I'll buy some more. If there's no dump, also great, because I already hold a ton of ETH. But I think the next, 3 months to 12 months are going to be like the actual super bullish period, and it's going to be very gradual. That's my take on it. Yeah, so that's that on the Ethereum merge. I ranted a bit on this because it's just the most significant event ever, right? In terms of a software upgrade, I think, and also by far, right, the most significant event in the history of crypto, I think. It's more significant than every Bitcoin halving, because at this point there has been 3, right? ETH, there's only been 1. So yeah, all eyes on this. Let's hope it's successful, right? I think if it is successful, the next few months are going to be super bullish for Ethereum. Okay, moving on. So there is a bit of an interesting kind of narrative going on for the ETH hash rate migration. So let me show you guys this website. So let me take these away. So this is a mining calculator website, right? It's called whattomine.com. Zoom in a little bit. So it gives you up here, right, all of the GPUs that popular GPUs people use to mine. Here are all the hashing algorithms, right? Different algorithms that the GPU can use to calculate. And then down here, it ranks all of the coins by their profitability, right? Based on how much they're worth, right? How much you can mine every day. So right now you can see Ethereum is still, ranked all the way on top. But once the merge goes through, obviously this is going to be non-existent, right? Ethereum will no longer have mining. So where will all of that hashing power go to, right? So a lot of people are speculating, right, recently on all these other coins, right? So Ravencoin, you might have heard, just got listed on FTX Perpetual. And this is a pretty legacy coin. You can mine it with GPU. It's decently profitable. And then there's also, I think, Ethereum Classic, Vertcoin, Ubic, right? These are all a lot of legacy coins. Beam also. So these are all kind of on the rise recently. But I don't think, these coins this narrative is a bit played out. Yes, after the merge, right, these are all going to see significant hash rate improvements, right? They're going to become a bit more secure. But I don't know, that trade seems pretty crowded, because if you just look at kind of Ravencoin price on CoinGecko, right, you can see it's been on a pretty dramatic rally for the past month, up from 3 cents all the way up to 6, 7. So I don't know about, if you're buying into the merge on these hash rate migration type of trades, especially if your coin, if the only narrative for your coin is this, right? So Ravencoin is super legacy. There's not much going on there. Same as like Ethereum Classic, same as Vertcoin, Ubiq, etc. But there are a handful of coins that I'm actually looking at, which are a bit newer technology. I think could be worth looking at. I'm hearing some buzz as well. One of them is Ergo. So this one, you can see at least it's not a legacy coin, right? So yes, it launched in 2018, but this isn't some like legacy like blockchain proof of work UTXO type of coin. Instead, it's actually a smart contract platform, right? So it's heavily skewed towards DeFi. It's a smart contract platform. I'm not sure what kind of language it uses, but you can see this is a pretty modern kind of website. They're still coming up with significant upgrades. I'm not sure if they have any plans for adding a EVM, but smart contracts, at least it's way more than just a kind of a coin blockchain of the last generation, right? So this is one to watch. And then also Flux, I think it's also super interesting. So Flux takes it to an even higher level, right? So what this does is, instead of like your typical like proof of work coins that just used to create blocks, validate transactions, and find some random nouns that can be used to create blocks, which all that hashing power is going to waste, right? Your electricity goes to waste. What Flux does is actually a computing network, right? So Web3 computational network. You can dedicate your GPU to it, and you can mine some Flux coins. And then this GPU power is actually being used to, I'm not sure if it's like rendering or doing graphics work, but it's actually doing some work, right? So that's pretty interesting. And you can see some of their, some of the networks that use them. Like, I think, is it Polkadot? Wow. Some apps on Polkadot actually use them. Cardano uses them. Presearch uses them, right? So they actually have some other networks that take advantage of this computing network. So this is way more next gen, right? So I think these kind of mining could really take off, right? I think the old narrative of just using your GPU to do some random computation to mine random blocks and go to waste, it's going to get phased out, right? I think the next gen is going to be your GPUs actually being put to work. And this is one that I'm watching pretty closely. So these kind of platforms, combined with, the new interest that they'll get when ETH mining, gets replaced, and they get more hashing power, I think could be interesting. So this one also has been up, super dramatically, 40 cents to almost like $1.40. So I don't know about getting in at these high levels. But if you're really like trying to speculate on this type of trade, like I would take these next gen platforms versus the old gen. So I'm sure there are a bunch more, but these are the only two that I found to be truly like doing something with the computing power. Okay, so that's the ETH mining rate, ETH hashing rate migration trade. And then let's talk about a few kind of significant events just very quickly. So first off, we have the Cardano Vasil hard fork. This is going to happen finally also on September 22nd. So this has been delayed, I think, since June also. I think most people are underestimating this event. So what do I mean by that? Well, last year when there was the Alonso hard fork, Cardano had a very significant run up because Alonso introduced smart contracts to Cardano. So all of a sudden there's an ecosystem, people's flooded in. And then if you look at like Cardano price today versus like kind of that period, let me like remove all the charts here. So if you look at like dailies, right? This run up here, this was the Cardano Alonso hard fork, right? So when it was announced around July, and then all the way up to, I think September 1st was the day of the launch, right? The smart contract launch. It just went down only, right? Why is that? Well, it just got way too pumped, right? And Cardano wasn't that ready, to be honest, to get kind of the crowd of speculation, the chain rotators that are used to trading a lot of meme coins on new EVM chains. So they all flooded to Sunday Swap, and obviously Sunday Swap couldn't handle the traffic. And that's why price, saw a super dramatic dump even on the day off. But this time around, right, from what I've heard and from what I've seen, like Cardano network has been functioning way better than when the news first came out, when Alonso first launched. But majority of kind of crypto crowd, the CT crowd, who are used to using EVMs, using Cosmos smoothly, they haven't tried Cardano. They still think Cardano doesn't work, Sunday Swap doesn't work. So that's why I think prices haven't rallied, right? Luckily, it's at 47 cents, which is the same rate on the day of the major dump on May 12th. So for the past like 4 months, price hasn't done anything, which is great, honestly. So this time around, once the Vasil hard fork goes live, and the network has a big news, right, has a big upgrade, I think a bunch of more people, right, will actually come in again to try it out. Just a lot of them just for shits and giggles and to laugh, but they'll be pleasantly surprised. I think Cardano will surprise a lot of people this time. Even if it just like functions decently, like your transaction goes through in 10 minutes, it's still like 100 times better than what happened last year. So even if that's the case, it's going to rally. Like, I think so. Especially given the past like 4 months, nothing happened in price. I don't know like why this is the case, but like if you're going to pick something to long into as an event, I would pick the Cardano Vasil hard fork versus the ETH Merge, because quite frankly, like price hasn't done anything. So yeah, I think a lot of people are underestimating this. Okay, so that's the Cardano Vasil hard fork. And then a couple more quick shots. So we have Apecoin actually has a major news coming up. Let me see if I can find the thing here. Apecoin actually will have staking launch, which is more significant than you might think. Yeah, here it is. So this is a really good thread by Pons. I'll just retweet this, so you can find it on my Twitter. But the gist of it is Apecoin is going to have staking, and the expected kind of reward rate at the current amount staked is going to be like 300 to 500%. So typically for a large coin like Apecoin, right, these kind of rates are super attractive, right? So what that means is when you have a top 100 coin or whatever launch staking at 300 to 500%, like super high, what usually happens is that rate gets adjusted down as more and more people stake, right? Because people will see that, okay, Apecoin's decently large, it's not going to rug, it's decently stable, so that rate they'll try to take advantage of it, right? So they'll end up buying Apecoin and staking it until that staking rate gets adjusted down. And then typically, right, if you follow like staking rates, a single-sided staking for top 100 coins is more like under 100%, more like 50%, 70% APR, like maximum, right? So that's why there's a potential alpha here, because there isn't that much ape to be able to be staked right now. So that's why the rates will be so high. So once the staking comes out, a lot of people will see this rate, they'll buy ape, they'll try to stake it. Once the rate comes down enough, that's probably where the equilibrium is. I haven't done the full math on this, But you can follow this thread. I haven't read the entire thing yet, but the vague summary is what I just described to you. But I'll make a full video on this. I think this is quite alpha actually, because again, because the market is so rough, a lot of people like don't follow things anymore, right? If you look at Apecoin, it hasn't done much since like the May dump. Yeah, their prices hasn't really done anything, in fact. So I'll do more research on this also and give you kind of the gist of when this staking was announced, and then we can map it on the chart, and then when the staking will actually go live, right? I'll do a full video on this, and then I'll update you guys on the next live stream. But I think this is quite alpha as well. Like there's so many major events for the top 100 coins coming up that people just aren't paying attention, right? And then another one, I'll give you a ton of alpha today actually. Another one of these similar events is Frax share is going to have an emission cut in December. So Frax, FXS, if you know, it's a governance token. It's the value accrual token for all of Frax ecosystem, right? The Frax stablecoin. Now we have like Frax Swap, Frax Lend. They're gonna have a major emission cut in December, right? And I highly recommend you to follow Growth. He's been like really spot on all of the FXS alpha. And you can see like December 20th is the date. A lot of people don't know this. Last year, it started to run to $40, right? And then if you look at Frax more recently, again, hasn't really done anything, right? Since even the May crash, like it's actually lower than that still. So I don't know what to say. Like there's just so much like extra alpha news that people aren't paying attention. Another one, like I've made a video about this already, Shibarium, or for Shiba Inu. If you just Google Shibarium, right, you'll see Shibarium, Shiba Inu, layer 2 protocol Shibarium is planned to launch sometime this year. A lot of people say it's going to be this month. And then the gas token is Bone, right? And then if you go back to the charts and then you look at like Bone, USDT, actually that's not a good, I think it's only on Uniswap the most. We look at auto. Yeah, this one has been, pricing in decently. Let's see it on CoinGecko. One year, yeah. So this has already seen kind of a 3x pump. Valuation wise, right, for a layer 2 protocol, the FDV for this is right now about 400 million, right? Taking this times that. So it's decently high. It's around the same range as Metis for layer 2. But honestly, like I don't know like if majority of people know this event yet. Like if you look up on your favorite like YouTuber, favorite TikToker, favorite like CT celebrities, I don't know if anyone has talked about this, even though price has gone up a lot. So I think there's still a much bigger crowd to be coming in here. So I'm still holding some Bone. I got in like on this kind of accumulation here around $1.50. We'll be buying more if there's dips. And then last one, by now you probably heard of Aptos. Aptos and Sui. So Aptos and Sui are two major layer 1 blockchains that's completely built from the ground up, and they're actually the team from if you heard of Libra project from Facebook, they had a kind of their layer 1 blockchain before, and then that rebranded to DM, and then Facebook eventually like abandon the project, but they have like 3-4 years of R&D that they've done. And then they split up into two teams, so Aptos and Sui, which use like very similar stack, very similar, the same smart contract language called Move. Both of these mainnets, I think, are going to be launching this year. And the last time that I've looked it up on the Aptos blogs, if you look at Aptos here, right? Aptos Medium, Aptos Labs. I think there's a kind of roadmap here. Something around here. One of these like roadmap updates, it might be on here, it might be on the Aptos website, but essentially it's they wanted to have like 3 testnets. I think the next thing is mainnet. I think the last dates that they've said was September. Right, so either this month or next month, Aptos mainnet is, I think it's gonna come live, and then Sui, when Aptos comes out, I think Sui is gonna follow like very, very closely, because they're the same stack, right? They were the same team before, so these are gonna be like surefire wins. Like I don't see how these are gonna lose, because Aptos have raised I think $200 million now, funding Crunchbase. If you just Google it, you see like funding rounds. Yeah, they've raised a total of 150 million. And then if you look at like Sui funding, Crunchbase, blockchain, not that one. Is it this one? I'm not sure. But Sui recently, yeah, here, Miston Labs has raised another 300 million, right? So these are not going to be losers, right? Even though, you know, if they launch at super high valuations, it might be hard for you to make multiple X's. But you got to consider like these are extremely large raises, like bigger than everything we've seen. I think in private fundraisers, I think the largest I've seen is like maybe Polkadot. I think Polkadot was like 70 million or something over like 3 rounds. These are gigantic raises, right? So, and they're already valued at $2 billion. So if they come out, right, as a layer 1 in mainnet, in this kind of market, you got to consider like what kind of valuation can they come out at, right? You already have your Solana, your Polkadot, your Polygon, etc. If Aptos comes out and it's already higher than Polygon, right, at like 7 billion valuation, it's gonna be like a very bad optics for the team, right? Even though they have a product, they can pump the price, of course, because they have so much money. If they launch at a super high valuation, it's gonna be a really bad optics for them because there's no public sale, right? So there's going to be a bunch of people, apes, that just want to buy at day 1. So what happens is I think it's way more likely for them to come out a bit lower, like lower than some of the existing kind of layer 1 chains, something like a 2 billion, 3 billion valuation, where, you know, it's like, it's justifiable for a completely new project, even though they have like much more money, they can pump it way higher. It will be way better for Aptos sake, for the retail kind of community sake. So I think these are gonna be pretty good bets. If they come out and let's say it's like 2 billion, 3 billion, anything under 5 billion valuation, I think I will buy. Because like, considering how much funding they have had, they should be valued at 10 billion at some point, right? They don't have to go there right away, but I don't think it's that hard of an ask, right? Obviously, I'm talking about like fully diluted valuation, not like current market cap, right? But just considering like how much funding they really have, I think a lot of people are going to fade them just because, you know, it's a new project it comes out and then people are going to say, oh, look, like new layer 1, but it's already 2 billion. Haha, what a VC dump. But they're going to be surprised again, just like how majority of people were surprised by Solana when they launched like super high and then they kept going. I think the same thing could happen easily for Aptos and Sui. So yeah, that's my take on that. I think that's all of the news I wanted to cover. It's a bit long. I think we already like went on for 50 minutes. That's all the news I wanted to cover. Let's do a bit of Q&A, and let me just go through kind of all the chats on YouTube, on Facebook, Twitch, everywhere, and then on TikTok as well. So let's see. If anyone has any questions on YouTube, shoot them now. They're not on YouTube yet. Let me just check on TikTok for a sec. Let me see. Is this your first live on TikTok? No. I've done a bunch of lives like year and a half ago, but I didn't have like screen share available, so it's pretty shit. Couldn't really show anything. Bacon, what's your long-term thoughts on Atom? Atom is actually, it could be very interesting. There's one thing I haven't looked into, which is like Atom 2.0. I don't know what it's about yet, but they do have a major upgrade. I think it's it might finally fall in line. I think for the adoption that Atom's tech stack has, right? If you look at all the chains that live on that use the Tendermint Cosmos kind of SDK, Atoms should be like top 5 coins. Right, it should be like $100 million because Binance Chain uses them, like Chronos uses them, Terra used to use them, a Phantom is on like IBC. I think out of all the top chains, like there's so many on them. I think by this point, like everyone is on IBC. So if you look at it that way, Cosmos should be way higher. It shouldn't be 4 billion. No way. It should be like at least top 10, if not top 5. But it was never able to catch that wave. I really wasn't sure why. I think it's like they were too focused on the technology, not so much on the tokenomics. And I've heard that Atom 2.0 is gonna really focus on the staking parts, the tokenomics parts, the value accrual parts. I'm not sure yet. Don't quote me on it. I'm gonna do more research on it. But I really hope one day Cosmos can see the kind of true value that it really deserves for the tech it has. It's just, I don't know when it's going to happen. I've said this so many times, right? Even on TikTok. But I've gotten burned by Atom like at least 5 times. So I don't want to say like this time it's going to be different. But I'm going to cover the potential alpha. I'll do more research on it. How do we get Aptos if there's no public sale? Just buy it when liquidity is introduced? Yes. Obviously, you wouldn't want to buy if it's super high, right? So, for example, if they launch at $10 billion market cap, it's going to go down. There's no upside there. But if it's like 1 billion, the upside is super significant, right? If you consider like they were already valued at like 1.9 billion in their private rounds, right? So it's all about the valuation game. How high is it going to be or how low is it going to be? Right? And then you can compare it to similar projects, similar layer ones, and say, okay, this has maybe 3x upside, 5x upside, or no upside. Let's see. What other Pulse chain thoughts? I wish they can launch, but like it's gonna take forever. I think Pulse chain will be decently successful. Yeah. Chainlink or QNT? I don't know what you want me to say. Like, I can't just compare like 2 completely random coins against each other. Like, they're not even similar in technology. Atom for next bull cycle. Yeah, I just covered it. ETH Merge is done. Yeah, see, like a lot of people are saying like ETH Merge is done. It's done. Like everyone knows. Like there's not going to be anything exciting. But I think they're going to be pleasantly surprised over the next year. Let's see. How will ETH move the couple days? Seems like the big players won't participate in the merge. Yeah, exactly. Like they don't participate in trading it, right? So you can try to short it. You can try to time the potential dump and buy more, but like everyone is trying to do that, and who knows what's going to happen, right? I don't think it's that useful to go in on the huge event that's going to happen in 2 days. Like, how are you supposed to know which way it's going to go in a 1 day period, right? So I'm not really interested in doing that. I think the long-term effects are much easier to bet on. Are your ohms still locked? Beat bank sets? No, it's not locked. It's been unlocked for quite a while now. I have no ohm left. Lost about like 60% on that trade. Mind sharing more about ZK Starknet? What's your play on this, if you don't mind sharing? Just try out all of the ZK rollup layer 2s. So ZK Sync, Starknet, Aztec, Immutable X. What else is there that are major players? I think those are the major ones. Try them all out, like bridge to all of them. Set up wallets. Do some swaps on the testnets on there, if there are any, and then get the airdrops. And then afterward, if there are any public sales, obviously try to participate. But if there were no public sales, then once they come out, right, look at their valuation and then compare it to something like, leading optimistic rollups and say these can at least reach those types of valuations. I think it's pretty reasonable for them to reach like similar levels of hype as Arbitrum and Optimism. And then if the valuations are much lower, then you see there will be a potential upside. And that's it. I think that's pretty easy. Algorand also has a major upgrade coming up, I think. I also haven't done the research on this, so I can't give you kind of my thoughts yet. But yeah, I've heard there's something big coming up. Okay, let me check a little bit more on TikTok. Do you trade support and resistance levels? Sometimes, but not so much recently. Like pure TA trading, I don't think it's that valuable right now, especially like when there's not that much trend going on. Like majority of the time, Bitcoin, Ethereum, and the overall market is going sideways, choppy. This is a really bad time to trade pure TA, to like buy, because you don't have directional bias, right? Versus kind of more fundamental analysis, I think there are a lot more stuff to get in early on. Any thoughts on Helium, HNT? I don't know if they have news coming up, but very good coin, I would say. Yeah. Thoughts on layer 2 scaling after merge? What pump hard? It's not really related. So layer 2 doesn't get affected by merge. ETH merge, right? On this time the merge, it's only about transitioning all the transactions from proof of work to proof of stake. There is no scaling in terms of speed and cost improvements yet. That will come with sharding, which is, I don't know when it's going to come yet. I think it's at least 6 months to a year out. And even then, right, it doesn't actually impact layer 2s, right? So you got to understand, like, there is the Ethereum network, right, where it has like proof of work before, now it has proof of stake, and it has like sharding with it. All of these are the base layer. These are all layer 1s, right? Layer 2s already exist, right? Whether Ethereum layer 1 is proof of work, it's proof of stake, it's sharding, whatever, layer 2s don't actually get affected. So no, there's not going to be layer 2 pump because of Ethereum merge, because there are no upgrades being done to Optimism or Arbitrum or Metis directly because of Ethereum merge. yes, they will scale even faster because the base layer is now actually not yet, but they'll become a bit cheaper. I guess you can say that, because the base layer gets actually no, the merge doesn't have any cost or speed improvements. Sharding will have that. So yeah, no, there's not going to be any impact for layer twos in terms of their scalability for the merge. What does you see ETH rising to? I think, over next year, $5,000 is going to be pretty safe bet. Um, 5K in 2 years? Yeah, I'd say in 1 year. Like that's, I don't see that as like hard to do. Look up ISO 222. Yeah, I have a video planned for that. I don't have the full details on it, but basically there's like a standard for banking related kind of activities to use bunch of existing networks. There's like XRP, XLM, Stellar, Confirmed. There's like Algorand, Cardano. I forgot. There's like XDC. There's a bunch more coins that are like rumored to be on it. And apparently like those coins are not going to be like securities. They're only going to be like utility tokens, I've heard, or something along those lines. And it's like super bullish. I don't know about it actually having that big an effect, but it certainly is getting talked about a lot by retail, right? ISO 222. So I'm going to do a video on it. I think it's a decently big narrative. House Mover, I still have a ton of it to be unlocked over the next year. It's just, it's down only, sadly. Luna Classic tax burn coming in a week. See, I sold Luna Classic on the day of the Binance announcement because Binance said the potential news was that Binance was going to burn their transaction fees. But when Binance made the announcement, it's not a transaction fee burn. It's only deposit and withdrawal burn. So if you look at Luna Classic right now, like Lunacy, it's been like down only for the past week or so. I've sold around like 50 cent, 0.0005. Luckily, why? Because if you look at the trading volume for it, 24-hour volume, Binance has $1 billion on it, right? It accounts for 50% of the volume. 50% of this volume is not going to have a transaction fee burn. I think the only one that is currently burning right now is MEXC, which is like only 12 million, like 0.6%. So 1%. So Binance only burns Luna Classic when you deposit or withdraw. But you see like majority of these are trading. So when you trade on Binance, you don't actually burn any Luna Classic. There's no, reduction in supply when you trade on Binance. So that news was like, okay, I had to sell the news on that because Binance wasn't supporting this fully. So that's why I got out of Luna Classic. I tweeted about this as well. If you guys have the latest alpha on this, like if Binance changes their mind, please let me know, tweet at me. But I didn't see, I didn't see that they are going to burn any like trading fees. So which is the major thing that could happen but didn't happen. So what do you think about Sui? It has really big potential. Same as Aptos. The only thing is you wait till after till it launches, whether there's going to be a public sale or not, and also what the valuations will be at launch, right? And then you act accordingly. Gate and KuCoin said it will burn. Okay, cool. Let me look that up. Gate.io Lunacy burn. What's their burn rates? What's the announcement? Yeah, I need to see like the official announcement, right? Because Binance has one of these official announcements of how they want to do it. Yeah, I'll do the research off stream. But if there are significantly more exchanges, like for example, KuCoin's $200 million trading volume is all going to be burning 1.2%. That's pretty big. Gate.io 150 million, if it's going to be burning 1.2% of that, that's pretty big, very significant still. But I don't have a clear kind of official announcement that I can read to you right now, so I don't know. I'll do that off stream. CPI tanked the market. Again, like go back to the stream recording, but CPI, inflation, macro, it's just, if you're waiting on the official numbers to come out, you don't have an edge there. There's nothing to trade there. KuCoin and Gate doing off-chain burning withdrawal deposits. Yeah, there you go. So if they're only doing off-chain withdrawal deposit burnings, these numbers are not how much it's going through. So the burning is going to be way, way smaller than that. What do you think about Cardano short term? Yeah, look at the stream, but I think Vasil hard fork people are underestimating. Bro, info on ETH up or down, like short term might be a solid news. Long term up. I think the long term up is very easy bet. Do you still hold Glimmer, and what's your opinion? Yes, I still hold it. I have a lot of Glimmer unlocking from Moonbeam crowd loan over the next year. I don't really have an opinion. I wish it can go up. They're still doing a lot. The EVM is running very smoothly, but price is continuing to tank. So I wish it can come back. But yeah, it is what it is. I can't recommend you to buy it, even though I hold a bunch of crowd loan tokens to be unlocked. But there hasn't been much innovation on it recently. Okay, I think that's all the questions. We could answer for today. Thanks for tuning in to the live stream. This is the first episode of the Bacon Bits show, Bacon Bits podcast, whatever you want to call it. We're going to go live again on Friday around this same time, 10 a.m. EST.